Rohr here with an early global view on Thursday, January 8th, 2015. It's currently just after 7:30 a.m. U.S. Central Time. And even though this is a global view today, it can be kind of concise because so much is conforming to what we discussed previous in Tuesday's global view and yesterday's concise highlight. So what does all this mean to the markets? Well, for the equities, it means they're strong, especially interesting in the wake of the weak European data, German factory orders and those confidence numbers. The S&P 500 future short-term charts here, hourly left, 30-minute right, as usual, is up to 2036 after having traded up to 2040. And as we had noted previous, if this market was good from variously 1985, which was the old high from back in July that we had as such a key level from which the market pushed up on the FOMC statement back on December 17th, and it held it this Tuesday and was able to get back above 2013 overall, which it did by gapping higher yesterday and then dipping a bit before it finally broke up from around 2005 out of its current downward channel back above 2013. It was capable of pushing right back up to the higher resistances. Variously, in the first instance, while there was an interim level around 2025, the next significant resistance was not until 2036 to 40, which we're back up to now. But within this wide swinging market and the shifting risk-on, risk-off psychology, as long as this market isn't going back below 2013 or especially 1985, chances are it fills up toward the top end of the range again. So while there is some further resistance historically around 2050, you can see the action there recently, but it was also important going back into December, and again at 2060 and especially 2070 to 75 area, the fact is that is where we expect it to end up. Now, it might put in a new high. The oscillator resistance this week's up to 2100. That'll be about 2105 in the next week, the oscillator and topping line. But for right now, incrementally, we're dealing first and foremost with the 2036 to 40, which it held against going back to last week, Friday, on the first trading day of the year, but gapped below by the time we opened on Monday on European and weak energy price concerns. And that's pretty much it for the short-term view of the S&P.